If you study wealthy people long enough, you'll notice something interesting. Again and again, real estate appears everywhere. Millionaires own it. Billionaires own it. Investors talk about it constantly. And the crazy part is, many people become wealthy through real estate without inventing technology, becoming famous, or creating massive companies. So why does real estate create so many millionaires? Why do wealthy people continue buying property generation after generation? And why do some people go from owning one small property to building massive wealth over time? Because today, we're going to break down the real reasons real estate has created more millionaires than almost any other industry in the world. And trust me, some of the reasons have nothing to do with houses themselves. Let's get into it. Real estate uses leverage better than almost any business. One of the biggest reasons real estate creates millionaires is leverage. Leverage simply means using borrowed money to control bigger assets. And real estate allows people to do this at a level most businesses cannot. Think about it. A person may only have $20,000, $50,000, or $100,000. But banks may allow them to control a $300,000 property, a $500,000 property, or even millions in real estate. That's powerful. Because if the property increases in value, the investor benefits from the appreciation of the entire property, not just their down payment. This is one reason wealthy people love real estate. It allows them to control large assets using leverage. And when leverage is used carefully, wealth can grow much faster. Now think about what this means practically. If you put $50,000 down on a $250,000 property, and that property rises to $350,000 over several years, you didn't make a 40% return. You made a $100,000 gain on a $50,000 investment. That's a 200% return, and leverage made that possible. This is why wealthy investors understand leverage deeply, because used correctly, it multiplies results far beyond what cash alone could achieve. Real estate creates cash flow. Another major reason real estate creates millionaires is cash flow. Good real estate can produce monthly income consistently. Every month, tenants pay rent. And if the property is managed correctly, part of that rent becomes profit. Now imagine owning one property, then 3, then 10, then 50. Over time, that monthly cash flow can become enormous. And this is why many investors become obsessed with acquiring more units, because each property becomes another stream of income. Eventually, some investors reach a point where their properties pay all their bills, their lifestyle, and even future investments. That financial freedom is what many people are really chasing. But here's what most beginners don't understand about cash flow. It isn't just about today's income. It's about tomorrow's income too, because rents tend to rise over time. A property that produces $500 per month in profit today may produce $700 or $800 per month a decade from now. And you locked in the purchase price years ago. That's why experienced investors think long-term. They understand that today's small cash flow can become tomorrow's life-changing income. Especially as loans get paid down, rents increase, and portfolios grow. Tenants help build your wealth. This is one of the most powerful concepts in real estate. Tenants often help pay down your mortgage. Think about how crazy that is. Someone else is helping pay for your asset. Over time, the loan balance decreases, the property may appreciate, and rent may increase. And eventually, the investor may own the property outright. This creates long-term wealth accumulation, and this is one reason real estate can become so powerful over decades. Time works in favor of the owner. Let's put numbers on this so it becomes crystal clear. Imagine you purchase a rental property with a mortgage. Each month, your tenant pays rent. That rent covers the mortgage payment. And slowly, month after month, year after year, the mortgage balance drops. After 30 years, you own the entire property outright, and your tenant helped pay for most of it. Meanwhile, the property may have doubled or tripled in value. And now that same property produces pure profit every month. No mortgage to pay off, just income flowing into your pocket. This is the quiet engine of real estate wealth. Most people never see it. But wealthy investors understand it deeply, and they use it again and again across multiple properties. Appreciation quietly creates massive wealth. Many people underestimate appreciation. Real estate values historically tend to rise over long periods. Now, yes, markets go up and down. But over decades, strong real estate markets often increase significantly in value. A property purchased years ago for $150,000 may later become worth $500,000, $1 million, or even more. And many wealthy investors became rich simply because they held valuable real estate long enough. Patience becomes incredibly powerful in this industry. But appreciation isn't just about hoping prices go up. Smart investors also force appreciation. How? By improving properties. Adding a bathroom, renovating a kitchen, improving curb appeal, and converting unused space into livable square footage. These improvements can dramatically increase property value. And this is what separates passive investors from active wealth builders. Some investors buy a property, then strategically improve it, and within a short time, they've added significant value to the asset. This is called forced appreciation, and it allows investors to create equity on their own terms, rather than simply waiting for the market to move. Both strategies work. Passive appreciation builds wealth slowly through time. Forced appreciation builds equity faster through action. And wealthy investors often combine both strategies to maximize results. Real estate creates multiple ways to make money. This is another reason wealthy people love real estate. There are multiple profit strategies at the same time. For example, a property owner may benefit from cash flow, appreciation, tax advantages, equity growth, and loan paydown. That means wealth is growing from multiple directions simultaneously. Very few businesses operate like that. And over time, these benefits compound massively. Think about other investments for comparison. If you put money in a savings account, you earn interest. That's one income stream. If you buy stocks, you might receive dividends, and hopefully the stock rises. That's two streams. But real estate? A single property can generate rental income every month, equity growth as the mortgage gets paid down, property appreciation as the market rises, tax deductions that reduce your taxable income, and the ability to refinance to pull out equity without selling. That's 5 different wealth-building mechanisms in a single asset. This is why experienced investors often call real estate the most powerful wealth-building vehicle available to everyday people. Not because it's glamorous, but because no other common investment stacks as many advantages together. If you're enjoying this video so far, make sure to subscribe for more content about money, investing, businesses, real estate, and financial freedom. Because we talk about the strategies and investments that can help you build long-term wealth. Now let's continue. Real estate rewards patience. One thing many beginners misunderstand is that real estate is usually not fast money. Most wealthy investors built their portfolios slowly, one property, then another, and over time, momentum builds. The internet often glamorizes overnight success. But real estate wealth usually compounds quietly over years. And honestly, that's one reason many people fail. They want instant results. But real estate often rewards patience, discipline, and consistency. The investors who survive long-term are usually the ones who understand delayed gratification. There's a concept called the compounding effect. And in real estate, it works quietly in the background. The first year might feel slow. Maybe you own 1 or 2 properties. The cash flow is modest. Progress seems small. But by year 5, you might own 5 properties. Cash flow grows. Equity is building across multiple assets. By year 10, the portfolio looks completely different. And by year 20, some investors look back and realize their early patience created life-changing wealth. This is why the most successful real estate investors rarely quit. They understand that real estate rewards those who stay in the game. Every year that passes, every mortgage that gets paid down, and every rent increase that compounds works in favor of the long-term owner. Inflation actually helps real estate owners. This surprises many people. Inflation hurts most consumers, but it can help real estate owners. Why? Because property values often rise, rents often rise, but fixed mortgages may stay the same. That means, over time, the debt becomes cheaper relative to inflation. Meanwhile, rental income increases and property values may increase. This is one reason many wealthy investors love fixed-rate debt. Inflation can quietly work in their favor. Let's make this more concrete. Imagine you bought a rental property in 2005. Your fixed mortgage payment was $1,200 per month. At the time, you charged $1,500 per month in rent. Modest profit. But fast forward to today, that same mortgage is still $1,200 per month. It hasn't changed. But rents in that neighborhood? They might now be $2,500 or $3,000 per month. The debt stayed the same. But the income doubled or tripled. That's the silent power of inflation for real estate owners. While renters struggle with rising costs, property owners quietly benefit. This is one reason experienced investors try to lock in fixed-rate financing, because time and inflation tend to work in their favor. The power of equity, one concept many people overlook, is equity. Equity is the difference between what a property is worth and what you owe on it. And it is one of the most powerful forces in real estate wealth building. Here's why. As you pay down your mortgage, equity grows. As the property appreciates, equity grows. And once you have significant equity built up, you can access it through refinancing without selling the property. This allows investors to pull cash out of existing properties and use that money to purchase additional properties. It's called a cash-out refinance. And it's how many experienced investors rapidly expand their portfolios. They buy a property, build equity, refinance to access that equity, use the cash to buy another property, and repeat the process. Over time, this cycle can compound enormously. The first property creates equity. That equity funds the second property. The second and third properties create more equity. And suddenly, the investor has a growing portfolio funded largely by the assets themselves. This is the real secret behind how some real estate investors scale so quickly. Not just savings, but equity recycling. Real estate scales bigger than most people realize. Many people think small when they first enter real estate, maybe one house or one duplex. But experienced investors think differently. They think in systems, portfolios, and scalability. One property becomes 5 properties. 5 become 20. Then apartment buildings, commercial properties, and developments. And once investors understand financing and systems, growth can accelerate dramatically. That's why some real estate investors eventually control hundreds or thousands of units. The reason scaling becomes possible is systems. Tax advantages give real estate investors an edge. One of the most underrated reasons wealthy people love real estate is tax advantages. Real estate investors often access benefits that most employees never see. For example, depreciation allows investors to deduct a portion of the property's value every year, even if the property is actually going up in value. This can create what accountants call paper losses, which can offset other income and reduce tax bills significantly. Additionally, investors can deduct mortgage interest, property taxes, repairs and maintenance, insurance, property management fees, and more. These deductions can dramatically reduce taxable income. And in some cases, real estate investors legally pay far less in taxes than employees earning similar income. Then there are strategies like the 1031 exchange, which allows investors to sell a property and roll all the profits into a new property without paying capital gains taxes immediately. The bigger picture, real estate creates millionaires because it combines several powerful things together: leverage, cash flow, appreciation, equity, tax advantages, scalability, and time. And when those things compound over years, massive wealth can be created. Now, yes, real estate has risks. Bad deals exist. Markets change. Problems happen. Tenants don't always pay. Properties require maintenance. Financing can be complex. And not every investment works out perfectly. But many wealthy people continue investing in real estate because they understand one thing: assets that produce income consistently can completely transform financial futures. And honestly, some of the wealthiest people in the world built fortunes not through flashy businesses, but through patiently acquiring assets over long periods of time. That's the real power of real estate. It rewards those who stay consistent, who keep learning, who refuse to panic, and who understand that time is one of the most powerful forces in any investment. The investors who understand this and act on it with patience and discipline put themselves in a position where wealth almost becomes inevitable. Not overnight, but absolutely over time. And that's the real reason real estate creates millionaires. Not luck, not shortcuts, but the steady, compounding power of great assets working for you, day after day, month after month, year after year. That's the game. And now you understand how to play it.